And our next guest is another friend of the income generation, Dave McAdams. He is president of McAdams Group, LLC in Memphis, Tennessee. Dave, welcome back to the show.
Hey, thanks for having me again.
So, okay, we had a pretty good year in the economy for the second, third quarter. Fourth quarter, who knows, they're talking about maybe a lower GDP growth by a good margin. Do you think it's going to be lower, and how do you think that's going to affect the economy and GDP growth going into 2019?
Well, I do think it's going to be lower, but, you know, it's interesting because the Fed just elected to raise interest rates, and one of the things they cited in their rationale was that the labor market continued to strengthen, economic activity is rising at a strong rate. So if you believe the Fed speak, then it sounds like we're likely to have good continued GDP growth moving forward.
Okay.
Now, GDP growth and what the stock market does are not always correlated and not always aligned,
Of
but
course.
I do think
Now talk to us about the stock market then.
Okay, so right now the Dow almost touched 27,000 in the 2018 highs. Really, right now, as of today, we're down about 15% off of that recent high, and it's not going to shock me if that sell-off continues down to maybe a Dow 21,000, which would represent about a 20% drop from the 2018 highs. Now, a little bit more, I'm not trying to be Chicken Little, but a 18,500 Dow would represent about a 30% drop. And frankly, for us to get to fair valuations in the market, you're probably going to need to see about a 20 to 30% pullback from the recent 2018 highs to find stocks in a nice happy zone where buyers would probably rush in because they're paying a fair price for the stock.
Okay.
I don't think we're going to see a 50 to 60% drop, which would obviously signal a strong entry point where price to earnings ratios would be so low that if you had a lot of money in the bank, now would be the time to load up.
Sure.
But I don't think we're facing that type of economic cycle.
So David, we unfortunately we need to leave it there for now. We're out of time. I don't understand either why the Fed's raising rates and they're talking about recession, but they're doing it. Dave, thanks for being with us. We appreciate it. And you stay with us. We'll be back with more here on The Income Generation. I'm David Scranton.